Hey everybody, Chuck Barone. Monday, April the 17th, 2023, and we're off and running on another week of crazy, guys. These markets, I gotta say, I've been watching these markets a very, very long time. And I guess, there's bound to be some confusion in the situation we're in right now, the environment with inflation and, in spite of inflation, employment staying hot, corporate earnings mixed with some industries doing great, some not so much. There's just been so much going on, adding to the confusion. We've been trying to sort through it all for you guys, giving you guys the very simplest methods to get wealthy, to at least start building wealth. And I think we've been very successful with what we've suggested so far. But anyway, before we get rolling, let me just welcome everybody to the show. We appreciate you guys being here. Thank you so much for your support for the channel, watching the videos. We really appreciate each and every single one of you guys. All right, let's get into the markets today. So today starts off, we're kind of still limping in from last week. Markets actually have been holding up very well this year so far. Stocks had a decent day today. So the Dow Jones rallies 100 points, 33,987 on the Dow. The S&P up 13 points, 4151 for the S&P. And the NASDAQ rallies 34 points to 12,157. Not a spectacular day, but a good, solid day in the markets. The kind of day normal, regular investors like me and hopefully like you like to see. Steady, not a tremendous amount of volatility where they're just whipsawing all over the place. Today's chart looked pretty, reasonable. Not a lot of news today, which is probably a good thing for these markets. But, there's going to be some data coming later that could move these markets. We'll talk about that in a little bit. But anyway, today, decent day for the stock market. Bonds, however, are the opposite. Bonds continue to sell off. Rates, high yields on these bonds, rates continuing to rise. The 10-year up 7 basis points today at 3.59%. The 2-year jumping 9 basis points to 4.19%. So now, here we are. Just not a lot of room between these two. We still have that inversion we've been talking about. As we know, the inversion, a very strong warning that a recession is coming. The inversion's been kind of closing up a little bit. Now gaining again. We got 60 basis points that had shrunken into the 40s. Now starting to widen back out again. But guys, this day-to-day stuff, even though I report on it every day, hard to really follow it because it's just been such a whipsaw with one day up, the next couple of days down, then a couple of days up. You can't even, by the end of the week, you're like, did we gain or did we lose? Because it was just so volatile all single week. Bonds today selling off, yields rising. Dollar today, strong day for the dollar, up more than 0.5 point. Back up above 102, 102.09 on the index, a decent showing for the dollar, gaining strength. It's still in pretty strong position. I guess, with the idea now being rates going to still continue to rise, that's going to give the dollar a little more strength. So the dollar rising back above 102. Strong dollar usually means not a great day for gold and silver, and it wasn't. Gold dropping $9.10 today, back under 2,000, $1,994.90. I'm telling you guys, this is just temporary. Above 2,000 to stay very soon. Silver dropping 32 cents today, 25.01, holding that support at $25. I like that. I think that we'll see where the dollar goes the rest of this week and what happens with gold and silver. But I tell you guys right now, this is just the start of a bull market. Well, it's been going for a little while, but we're not anywhere near the middle or even close to the end of this bull market yet. I think metals, there's demand for these metals. There's money parked on the sidelines. As soon as they get the sign that money is going to come pouring in, gold and silver are going to rise. You're going to see it. Oil today back down $1.54 per barrel. West Texas Intermediate, $80.98. I've been telling you guys that, the trough between 75 and 80 a barrel seems to be where oil is most comfortable. We've had a lot of bullshit in the news from OPEC and China and Russia and this and that, but the bottom line is the U.S. is the demand, and if U.S. demand is falling, which it is, oil price is going to fall with it. Bitcoin today had been so strong, sells off a little bit today, down $873, 29,477, still a very strong number for Bitcoin. Would like to see it stay above that 30,000. Now that 30,000 turns into resistance, so there's going to be some banging at that number before it breaks through. We'll see how long it takes. Now, as I do every Monday, I'm going to give you guys a quick idea of the data we're going to get this week, stuff we're going to hear about in these markets, to give you guys an idea of what's coming. Today was a very quiet day. We got the Empire Manufacturing Index, which I have not seen yet. And I'll talk about that a little tomorrow once I get the results there. But today was earnings day. And the big earnings company was a big earnings news today was Charles Schwab, of course, beating estimates. Even though deposits down, people a little bit scared of the non-majors right now, including some brokerages. So Schwab, less deposits, but strong earnings. Schwab beats, decent day for the market. Now tomorrow, tomorrow's going to be a relatively quiet day, but we will get some real estate data. We'll get building permits and we'll get housing starts. So this goes to new houses, new buildings. We'll see where builders are at, what the market's looking like. If building permits are up, that means obviously builders are optimistic. They're going to build more houses. We'll see what housing starts look like. Building permits tells us where they think the market will be in 3 to 6 months. Housing starts tells us where they think it is now going forward another month or so. So we'll see what that'll be interesting tomorrow. And we'll also get some important earnings tomorrow, including Bank of America, Goldman Sachs, Johnson & Johnson, Lockheed, a pretty nice diverse part of our economy with a bank and a Wall Street firm, a manufacturing company and a defense company. It's interesting to see how those earnings come in. I mean, any one of those with a real bad miss could tank this market. Wednesday, not much Wednesday either, quiet day. Wednesday we'll get the Mortgage Bankers Index, which will give us an idea of not only what's happening with new houses, which we'll learn a little bit about Tuesday, but what's been happening with the existing real estate market. Are there any signs of life for refinances? Where are rates? Where do the brokers expect the real estate industry to go over the next short term? We'll also get more earnings on Wednesday. Big earnings from Tesla, Morgan Stanley, IBM, another diverse spread through the economy. On Thursday, that'll be the big data day this week. We'll get existing home sales. We'll get jobless claims. That's going to be the big one. They're expecting that to be up to 244,000 from 238 last week. We'll also get leading indicators index, the Philly Fed survey, and we'll get more earnings from companies like American Express and AT&T. Then on Friday, surprisingly, no data coming Friday, just earnings. HCA Healthcare, Procter & Gamble, Freeport-McMoRan. So another parts of the economy. With all of these earnings combinations, we should see where companies are as far as earnings for last quarter throughout the economy. A very interesting week for data. Obviously, the big day being Thursday and the indigestion it causes going into Friday. News you guys need today. Well, there's not a lot of news today. Quiet day, kind of the market catching its breath after a ton of data last week and kind of waiting to see where we go. Jobless claims now going to be the news this week, of course, with corporate earnings. But jobless claims are going to be what the Fed's watching, I guarantee you that. I'm sure the Fed right now is feeling like they can raise rates, continue to raise rates without causing a massive recession. And whether they're right or wrong, that's not my job to judge. I just translate what I believe they're thinking. But news you guys need today. This article really made me sad, guys. I was reading that credit card debt is continuing to soar here in the United States. The average American, 100 million Americans, now averaging $7,500 plus in credit card debt. It is so disappointing. Can you imagine carrying that kind of credit card debt load? And interest rates on credit cards 20%? Holy crap, man. You're going to pay friggin' $1,500 a year in interest on a $7,500 debt. We're talking usury here. This used to be illegal, guys. Now, they think nothing of it, right? So now we got consumers just hobbled by debt, giant credit card payments, car payments averaging above $700. You got rents averaging, $1,800 to $2,000. Mortgages even higher than that if you're buying a house right now. I don't know how consumers are keeping up with this stuff, guys. I know wages are rising, but they're not rising anywhere near keeping up with that kind of stuff. Imagine that. You're the average consumer, so you're paying $2,000 a month for your rent. Don't own the house, just paying rent in an apartment or whatever. You got $700 car payment, and you got about $750 in credit card payments. So you got, before you blink your eyes, you need $3,500 a month clear just to pay your house, your car, and your credit cards. That doesn't include everything else a person needs to live, right? Food, entertainment, your phone, internet, cable, car insurance, health insurance, saving a few pennies. I don't know how Americans are doing it, and truthfully, they're just not doing it. The statistics show that almost 60% of Americans are now living paycheck to paycheck. What that tells us, guys, if the Fed gets their way, and they get this unemployment spike they're looking for, if it's among the 60% living paycheck to paycheck, they're in deep doo-doo, man. That's bankruptcy time. People living paycheck to paycheck typically have no savings. Zero. None. These are the people who can't handle a $400 emergency without borrowing money. Well, guess what? If unemployment's going to start rising, these people are out, man. They're done. They're done. So very, very not happy news there. Actually kind of scary. I hate to use the word scary because it's not like a physical, oh my, it's a ghost scary. It's just scary for those people because these are obviously the people not listening to our show. If you're listening to our advice, none of this stuff applies to you. But the schmuckatellis out there who aren't listening to this show, the working people who are getting bad information, bad habits, whatever it is, drowning in payments, debt slaves, doomed people. Because once you get to that level, there's just no way out of it, man. You're dead. Another interesting note, retail investors sitting on gigantic losses in their portfolios, unwilling to sell, to dump those losses and find something more profitable. The average investor portfolio so far this year, starting in January, is down 27% for the year. 27% year to date. Now the market's been rallying, guys, right? You got the NASDAQ is up 16% so far year to date. S&P is up almost 8% year to date. The Dow's up this year. Investors still getting their asses handed to them, down 27%. Again, these are not the people who've been listening to our show. Because if you've been investing like we've been advising, getting into defensive positions, dividend-paying stocks, preferred stocks, utilities, defense, food, guess what? Those companies aren't down 27%, guys. So I hope some of the advice we've been giving you, even though it's very simple, non-complicated, don't need to be a rocket scientist. The basics are the basics for a reason. They work, and that's where everybody gets started. When you have some real money to invest, 100K plus, well, now you move to the advanced course. But until that time, the basic principles we've been laying out in this show are where you need to be. And finally, just a quick comment. Last week, I was going through all the government statistics, and a lot of people were commenting that I've drunk the Kool-Aid and making sure to comment that these numbers are bogus, don't believe these numbers. Well, guys, don't be surprised to hear that I don't actually believe these numbers either. I think these numbers are fudged for sure. I don't know about the blatant kind of lies that a lot of people want to believe. But I report these numbers because these are the numbers that Wall Street uses. Wall Street doesn't use shadow stats, okay? They don't. Wall Street uses the numbers that are reported, and that's how they set their valuations and expectations. Therefore, so should we, right? Now tell me this, guys. Can you guys in comments today name me a time where shadow stats made you some money? Or knowing something, being so clever, made you some money? Because I got to admit, I'd rather be dumb and in profit than really clever and lose money. So I hope you guys who are making sure to tell me what a dumbass I am and that these numbers are fake are making money, man. Because you're obviously clever enough to know these things. So tell me, how are you guys applying that to actually make profit? Because what I'm seeing in the statistics, okay, 60% of the people in the country living paycheck to paycheck tells me that probably roughly 60% of the people watching this show are living paycheck to paycheck, right? Average car payments, average rents, average credit card debt, I'm guessing, those statistics are going to be pretty much, I would like to think that the viewers of this show are not so far into the debt trap, but I'm sure there's a certain percentage that are. So these basic lessons are for those people, right? If you're a super complicated trader, if you're really clever and know your way around Wall Street and you're already making money trading and in your investment portfolio, I really don't, I hate to say it, but this show probably isn't the one you're going to be most interested in. This show is for people who can put away the razzmatazz, the razzle-dazzle, all the jargon and bullshit that goes, and get down to the basics. Because here's the truth, guys. If you've been listening to what we've said, number one, you save 10% of your income. So if you're an average guy, you're making $50K a year, you've saved $5,000 plus whatever that money's earned. You paid down your debt as much as you possibly could, even if it was $5 or $10 a paycheck. You didn't add any new debt. You've invested your money conservatively in the kind of, we haven't really recommended anything specifically, just kind of sectors, I guess. And if you've been in those sectors, those are the ones who've been wearing well. So you're not looking at 27% portfolio losses like the majority and the average person is. You've been spending your money thoughtfully. So the money you're spending, you're getting more bang for your buck. Now tell me, guys, what of these would be a horrible thing to live through? Huh? Really? And tell me then how knowing that the numbers that everyone is using are bullshit makes me money. Make me understand that, okay? Anyway, that's it for the day. I appreciate your guys' support. We love you guys. We really do. Even the guys who, are haters are going to talk smack to me in the comments. Love you guys too. We appreciate you watching the videos. But just tell me this, guys. How are you making money with all this razzle-dazzle? Because I've never really found it to be successful in my investing career, which is a long one. Anyway, that's it for the day. Tomorrow we'll be back. We'll have a little bit of data. We'll talk about that Empire Manufacturing. We'll go through some interesting earnings, some real estate data, bring you guys up to date. Who knows what surprises lay in store for us between now and then. Until then, my friends, my loyals, a lot of people smarter than me. We'll see you tomorrow. Thanks.